Hi everyone, welcome back to my channel. This video is going to be long. I'm literally going to just take the time to sit and talk about my Robinhood stock portfolio. I currently have 18 holdings, and I'm literally just going to sit and talk about them with you and go through my thesis, see what I've been doing good and what I've been doing wrong, and hopefully I can look back at it, remember a few things, or someone can learn from it. So I've already spent 30 seconds. Let's just dive into it. Here's my Robinhood portfolio. It is worth $2,855.99. If we look at the 1 day chart, this is how much it is. We're up 0.05%. Currently recording this on Saturday, November 25th. So it's the weekend. Markets are closed. 1 week up 0.87%. And this is where it just gets literally crazy. In 1 month, I've made $308.09. We're up 12.09%, which is really good. And this is where we'll dive in a little more. Past 3 months, up 5.64%, $152. And year to date, we're doing good. Up $608.81 and 27.09% for year to date now in November 25th. So 1 year, we put ourselves up 25.38%. All time we are up $622.52 or 27.87%. This portfolio was started on June 14th of 2022. And I started it off with, my invested capital is $2,233.47. So that being said, let's just kind of dive into my positions. I laid them out in just terms of weighting to make it very easy. So the first one is Bank of Hawaii. Current share price, you guys can see. And the current shares that I have is a little over 7 shares. The market value is $400 almost exactly, and it makes up 14% of my portfolio. The total return is 18.58% since the time I've owned it. I feel like nobody other than people in Hawaii would really give a care for this company, but I wouldn't really dive into like why I have it because it's not, nobody really cares, I guess. Like, it's not a big company outside of Hawaii. But the main thesis for this was that all of my friends that were going into finance, they preferred this internship program over other banks in Hawaii. And I just felt that they're undervalued because if we go to the year to date, we had like this banking crash with like the Silicon Valley one and a few others. I honestly didn't really look too much into it, but I felt like Bank of Hawaii, there was very little possibility that they would bankrupt as well. So I took the chance, I took the dice roll, and I bought somewhere around here. I have shares that have been up about that much, but I've kind of just been holding it. As of right now, I have no reason to sell, and the dividends are very nice, so I'm very happy to be holding this position. Okay, we'll go into the next one. My next biggest holding would be Berkshire Hathaway. This is Berkshire B. Even on Robinhood, you can invest in A, but the reason I invested in B is because I just want to get one share. I talked about this a little bit in another video. I don't necessarily feel that this company is the best in terms of like return, like I'm gonna make the most money, but I do want to go to the Berkshire Hathaway annual meeting in 2024 just because I feel it's like invaluable knowledge, especially at the age that Warren Buffett is at. I'd probably just learn a lot, way more than I would in terms of return from like other stocks, I guess. But there's not really actually much else to say for this, but it is 12.77% of my portfolio. I kind of just view it as like the market or like a index fund or ETF. Um, and it's done well year to date, so no reason to sell. Next up is Adidas. So I actually kind of do want to dive into this one because it is actually my best performing return in terms of return. So Adidas makes up 16 or 10.62% of my portfolio, and the total return is 53%, 53.47%. And I own only, well, exactly 3 shares because they don't let you do fractional shares for this company. It isn't like on the U.S. stock exchange. I forget. It's like on this ADR. So you actually got to pay a little bit of your return to hold it. But sorry, I'm a little sick too. So that's why my nose is running. But to keep a long story short, let's look at the chart. What do you think happened during this time that caused the stock to crash this far? Anybody who knows what was going on in November of 2022, it's very clear. But this was when the Kanye drama was going on. And it's easy to be like, oh, well, or whatever. Say whatever you want. But I knew Adidas. I'm never going to stop either buying Adidas or Nike shoes. Those are just always going to be on something I have. So if I can flex a little bit, I literally bought a share at the very bottom. I have one share I bought at $48.80. At this point, I kind of feel that it's pretty much fair value, Adidas. I don't think it'll go lower. I think, especially with the Samba shoes and like them diving into the Samba shoes, the superstars, and like focusing just on their primary like #1 shoes. That's been a big key this year. I'm sure if you know everybody that has a Samba shoe this year. I'm not complaining. I like them too, but yeah, like things go in waves in terms of fashion. So very happy to be an Adidas shareholder. Next up is Tesla. Even my other videos, I kind of just go past it, but I will dive in a little bit. Year to date, they're up close to 100%, and I think this is either my second or third highest total return in terms of my portfolio. Own just over one share, and then you can see all of my average costs and stuff. It makes up about 10% of my portfolio. And the total return is 45.97%. So this is just something I've kind of come up with in my mind. I'm not saying it's like an actual thing, but in terms of investing, especially in Tesla is like an aspirational. I don't know what I'd use this for, but like aspirational capital. So I aspire to own a Tesla car. I aspire to have Tesla solar roofs. I don't currently use any of their products as far as I know. I own two Tesla shirts, I guess, but it's like an aspirational company. Like I aspire to use one of their products in the future. And that's a big part of my investment philosophy as well. If you aren't using the product of the companies you own or stocks you own, then I feel like it's kind of, in a weird way, it's like I feel like you kind of shouldn't just own the stock because you're not using the product very frequently and you're not going to really know what's going on with the company. But in terms of Tesla, I mean, Elon is just always in the news for whatever he's doing. So it's easy to follow and I like following it. So very easy for me to see what's going on, and I see their path for success is very clear in my mind, in my personal mind. So it's very easy for me to see that the company is going to do well in the future. We'll go on to the next one. Amazon. So even in my other videos, I was talking about how Amazon was like a big loser for me in 2022. So look, it was at $87, $86, and now it's almost double that. I own 1.8 shares. You can see all that, and makes up 9.5% of my portfolio pretty much. And this total return is 44%. I feel like this company also like just doesn't need to be explained, but we're in the clear future, the next 10 years, I would 100% easily say that it's 100% likely that more people are going to be using Amazon than less. It's just so easy to use them. So many people are comfortable using them. So many people are within the Amazon Prime ecosystem. So it's just very easy to use. I wouldn't say they're the cheapest, but like it's just the most convenient for most people. Another big factor is my brother works for Amazon. In terms of whatever he does, he's a computer science guy. Very smart guy, and I feel like you should invest in the places that have really good talent. I like to consider my brother to be very smart and talented, so I like to think that he is a very small part in like a big company, but I believe in the company because he wants to work there, and yeah, I mean, he's doing well. So, Starbies. This is Starbucks. It's up 51% this year, or in the 5 years. This year it's pretty flat, but I don't mind that because I've just been picking up shares. This is at 6.55%. I'm already getting my dividend, or I got it technically, but it was on Friday, so that's just always being reinvested. It's just such an easy company for me to see. Like, people are just addicted to it. Like, it's a literal lifestyle. I got my freaking red cup on Red Cup Day, and I was happy to buy my $6.50 drink or however much it is. I feel like Starbucks, like anywhere you are in the world, it's literally just like the same. And I like that. Like, you always know it's gonna be whatever it is, your vanilla iced latte, your frappuccino. Like, it's just good. I love it. Yeah, that's it. Love Starbucks. Acushnet. I finally know how to say it right. Acushnet, I think. So this is under the ticker Golf. Like, it's so easy. Like, easy to remember too. And it's just like the Titleist brands, Scotty Cameron, FootJoy. Golf YouTube is blowing up. Golf kind of had an inflection point after Tiger kind of retired, I would say. And it was like either golf is going to die or some people need to work harder and make it relevant again. And that's the truth. Like, I want to say the Masters 2023, like even this year, like it just wasn't exciting. Maybe not this year or 2022. Whatever year where that guy wore all like the PGA merch versus like live. It was like golf just wasn't exciting. Now it is. We have YouTube, we have Bryson DeChambeau, good. And those videos are like fun to watch. Like truly, like I sit down and watch those 45-minute videos because they're exciting. Like that one guy made the hole-in-one on the par 4, which is just insane. Like that's literally 1 in a million or whatever the statistic is. But do I think, at the end of the day, do I think golf balls, golf clubs are going to sell more in 5 years, in 10 years, in 20? Yes, it is a high entry point sport. It costs a lot of money to play golf, very like everybody knows that, but it's so fun. The payoff is in terms of business. Anybody knows that golf is great in terms of that. And the one thing I was brought to attention like this year, golf for business is important because if someone is cheating when there's no stakes playing a round of golf, what does that say about them in business? If we have no money and we're out to play for fun on the golf course, and I'm cheating on every hole saying I scored better, I moved my golf ball, I throw my ball out of the sand pit instead of hitting it with a sand wedge, what does that say about me? If I'm cheating when there's no stakes, I'm going to cheat on higher stakes when there's more stress, business, life, this and that. Golf is very important for things like that, and that is what I've learned. And it might just be a personal thing too, but I've always played my best golf with Titleist golf balls. I've tried TaylorMade, I've tried Callaway, I've tried all the brands. I've just always played better with Titleist. It just might be a mental thing, but like, it is what it is. Yeah. That's it for Acushnet. Oh man, my favorite company in terms of dividend, just because I have it right here. I got my Coca-Cola Santa Claus edition one, Coke Zero. I have it in my room. Shit. Oh, well, I shouldn't swear, but it's like Christmas time, and I promise this is true. Go on the website. The modern depiction of Santa Claus, Saint Nick, or whatever, was made by Coca-Cola. Let that sit with you. The modern depiction of Santa, a guy with a beard wearing the red and white, was made by Coca-Cola. They own or whatever like that. And they're just the masters of advertising. And I even just got a Coke Zero just because of the Santa guys on it, but they're not performing the best, but I don't lose sleep over holding them. I have 2.2 whatever shares. You can see my average cost, and it's just dividend reinvestment. Even analysts are saying to buy, but in terms of this Robinhood app, but yeah, I just don't lose sleep over it. Do I think more people will consume Coca-Cola products in 10 years? Honestly, if I'm giving my honest opinion, it'll probably be the same, or like nearly the same. But they have such a big moat in terms of their stuff, like Sprite, Coca-Cola, that they can just add an extra cent to like the ounce. I don't know. Warren Buffett has that famous quote of what he said. And people are still gonna buy it. Like, I went to the 99-cent store. I'm not gonna get, it's not Joe's Cola, but that's what Warren Buffett said. It's like the cola that's nameless, not a name brand, and it's like, no, I'll just get a Coke. And I like Coke more than Sprite or Pepsi, so yeah, is what it is. Move on. McDonald's, God, they had this was like the Ozempic thing. This big crash. We even see this with sorry. Let me get water. We even see this with Coca-Cola. So there's like this big new drug called Ozempic, I think. No, I know, it's called Ozempic. It basically is like a weight loss drug. And it makes you not want to eat and like suppresses your appetite. And everybody in terms of like stocks like McDonald's and Coca-Cola, like the sugary drinks, Hershey's, this and that, they all sold off heavily over this new drug. Do you really think people are going to stop drinking or Coca-Cola and eating at McDonald's? I don't think so. I even wanted to go eat the McRib. I've never had that. Still haven't had it yet. But I was there for breakfast at my college, and I just got myself a breakfast big platter or whatever, and it's good. I love it. Yeah, I'm loving it. Can't complain. The stock is pretty flat, but I don't know. Watch the Founder movie. Like, I don't know. They own a lot of real estate, or like they own the real estate of where their businesses are. So if it's like not franchised but locally owned, I want to say, all those companies or owners are paying rent to McDonald's, and it's just a very consistent, easy cash flow. They really don't make that much from like selling food, but it's really a real estate business. If it's still on Netflix, I'm sure people can find it wherever, but the movie is called The Founder, and it's just about the rise of McDonald's. Really good movie. Next up is Netflix. They're just doing great this year. Here, I'll scroll to this so you guys can see while I talk. But I'm in a video art class this year at my college, and my professor brought it up to me how YouTube, or just any platform that has all this content, is infinitely valuable. And hear me out. You're watching this video on YouTube, I assume. And this information might be invaluable to somebody. Like, they could see my stock portfolio and be like, wow, I'm gonna make $100,000 from like this stock pick or whatever. That's pretty invaluable. I would pay a lot of money for the protection of all my YouTube content on my channel, because it is like 11 years of my life on this platform. If that was just suddenly to disappear, that would be pretty devastating to me. Like, that is a lot of like memories that I want to cherish, you know? Same thing with Instagram, Facebook, any platform where like you have all the like this part of your life, like it's just a big deal. So how does that reflect to Netflix? Netflix is the biggest selection of movies, TV shows that's not pirated, I would say. And they're just investing a lot in terms of content. So we have, like, just off the top of my head, the new Squid Game series that came out. We have Avatar: The Last Airbender coming out, and just had the One Piece live action that I really liked. They're a great company. They're doing very well. They've always done very well. And why would they stop doing well? There's no streaming service is going to compete with Netflix. We've already discussed the streaming wars with Disney Plus, Hulu, whatever you want to say, like Paramount, Max. Nobody's taking away any market share from Netflix. And they're just so good. Like, they even put the Spider-Man into the Spider-Verse on, and it's like, I love that movie. It's so good. Just to touch on it, since I already brought it up, like that, literally, like that that in editing style of like that comic book literally changed animation forever. So very cool. And then, what device is this? Is a MacBook. It's my iPhone. Like, let's look at the value, or like how much is this company worth? Apple's almost back up to a $3 trillion valuation. But the thing with Apple is, like, everyone's always like, how much bigger can they grow? Well, I don't know. I'm going to still use their products in 10 years. I've been using them since I was in the 6th grade. And I was 12 or 11, 12. And I'm 19 now. I'm probably never... have to be a huge event in my life for me never to use Apple products again. I have AirPods. I have the Maxes, or whatever they're called, AirPod Maxes. Like, oh, I literally tried to connect. But I'm just so already in the ecosystem that it's hard to like not be part of it. And I don't mind using them. Like, they're reliable. They work well, and yeah, I feel like there's not much else to say. Also, they have the top talent in terms of like one of the obviously they have pretty top talent people working at Apple, but even my classmates that I loosely follow on LinkedIn from whatever schools I've been to are all working at like these companies, and I find them to be very smart people. Do I want to invest in the companies that hire smart people? Of course. So I feel like that's just very easy for me to see. So this is Costco. Here's my position in it. Costco is like Netflix in terms of like its subscription model. You don't feel like you're paying for a subscription to Costco, but you are. So by paying that subscription, you feel more inclined to spend money at the stores. Because if you weren't paying a subscription, you wouldn't feel like you're losing value. There was a good video on YouTube by Food Theory, I think, or whichever one, but like that theory guy on YouTube about is Costco worth the value? And the answer was yes, but not for like necessarily the products that they sell, but more because of the $1.50 hot dog. And it was a crazy statistic in the video, but Costco sells more hot dogs than all of the MLB stadiums in the US combined. If that's not a crazy statistic, then I don't know what is, but I enjoy going to Costco to a certain extent. You get the free samples, everyone's relatively nice. Literally when I was applying for jobs, my dad was like, "Oh, did you try Costco? Did you try Costco?" No, Dad, I did not try Costco. I know you're watching this video. But yeah, if you want another kind of fun fact, Hawaii Costco Evele, for those that know, they know, that's the busiest Costco in the entire world. If you didn't know, now you know. That's on Oahu, by the way. Next up is MasterCard. And just like, oh, I didn't even mention this about Apple, but like, there's like 2 billion MasterCards in circulation being used. Or something crazy like that. I know that's true for Apple, but it's hard to wrap your head around 2 billion, but say you make a cent off 2 billion, right? That's 20 billion? I don't know. Wait, 2 billion, 200 million, 20 million. 20 million. Say you get 1 cent from 2 billion. That's 20 million. That's a lot of money. And I think another big thing about MasterCard is that you feel like you get the rewards. So it's kind of like a psychological thing that you're going to spend more because you get the rewards. And the rewards are nice. I get like, 2% back, but I don't know. It feels like its own dividend in a way. But it's also like, I try not to, but like you have the credit, so it's easy to like not pay it off, and then pay off more. And I know that's like a bad system. It really is. But like people still use it, and that's kind of the business that MasterCard's in. I, to a certain extent, feel like it's just easy to have a credit card too, because like you have Apple Pay, don't have to carry around a wallet all the time, so it's nice to that extent. Coca-Cola Consolidated. I'm gonna be completely honest. I know very little about the company. I just know that they're the bottlers of Coke products, and their stock price has always gone up. Like literally, there's no. Well, here it's like flat, but since here it's like gone up. And I already own Coca-Cola, the like whatever, I don't know, syrup making company. I don't know like actually the difference really between them two. I know this is the bottling, one is the actual Coca-Cola company, but like this just speaks for itself. Like they did something right. Now stock's up a lot, and I own like just $60. Like it's not a lot, but like it's nice. This is Abercrombie and Fitch. You can see my returns. This chart looks disgusting, to be honest. But if we go to year to date, it looks very nice. That's almost as much as Nvidia. And I don't want to spoil the big news with like this company, but they're whatever. Their financial statements are on their investor website. This company is perfect for my investing as of right now. I work for the company. I do. I work for Hollister. And we're doing well. We are doing very well. Hollister is a subsidiary from Abercrombie and Fitch. This stock movement is justified, in my opinion. I want to even go to 1 week. So, from here to here, so from November to here, we reported earnings. And they were great. So, this was like a 10% drop. Yeah, like 7%. And I think it was just people trying to sell out because the stock is kind of close to all-time highs. But look, it literally recovered. Like within a few hours, it recovered. And it went up 6%. So basically what I'm trying to say is this is a new company for me. But I think it has a huge growth potential that Wall Street just I'll take that out. But Wall Street just doesn't know about because it's a retail company. Why would they? It's a very small retail company too, in terms of market cap. So, look, its price to earnings is 18. Look into the company. I'm not going to do anybody's homework in terms of... I'm not going to try convincing anybody. The value is there. And as an investor, take advantage of that. That's all I'm going to say. Nintendo. Video games, movies, the whole package. I love Nintendo. I love it. It's not a big position. I kind of just bought a little bit because I thought it's gonna do well. They have like the amusement park in Universal. They're starting a movie. Oh my gosh, I'm having all these notifications. They're having just a lot of good things are happening for this company. They're gonna do well in the future. Nobody's gonna stop playing their video games in the near term. So, Chipotle, my favorite burrito company that is public. I love their burritos. And look, we even have like the perfect numbers 2222. That's an angel number. That's a good sign, I think. But yeah, total return 18.43%. I've just like put $1 in every time I got a burrito. I haven't done it consistently, but yeah, I already have a pretty good cost base on it. I guess I was doing it during this time, and it's just done well. But I love Chipotle. And that's why it's doing well. I support the whole company. I buy that many burritos. Literally, I'm not even kidding. Target. It's always a good thing when you say you wish you bought more. I just didn't have money at the time to buy it. But I had like, what? I don't know. $12. About here. I bought it like right here. I got around 105. Yeah, 105.22. Oh, I should have said this at the beginning too. If you're gonna pick individual stocks, you really gotta follow them. There's no other way of saying it, putting it lightly. You're not gonna make money unless you're following it every day for like a year. I've been following it since here. Look, February until October. And look, perfect timing. Earnings were great. Went up like 25%. I don't know if it's good value now, to be honest. I'm not saying Target's bad value. It's just I knew what I was doing in terms of this investment, just to put it easy. I'm not, and it's not a, whatever, take it as you will. I just knew what I was doing. Obviously, like, come on. There. Like, I did it. Now it's always going to be in my portfolio. I'm going to get that dividend, and it's a good feeling. But, yeah, did well. Then, here, I'll log out of, like, the system or whatever. Then I just have VTI, VO, SCHD, and SCHE. These are my ETFs. This just tracks total stock market. It's doing okay. Or no, it's doing well. It is. It's just, it's not supposed to outperform. It's just following the stock market. Here are all of the positions. And, yeah, SCHD, dividends, and this growth. All doing pretty decent, but, just scrolling back up, you have something right when there's only one red company and it's only down 64.64%. So, going forward, since it's already a 36-minute video, I opened up a Roth IRA in terms of with Robinhood. I'm gonna make a video about it when I have time this week. I'm just trying to add to it. It's nothing big as of right now, but it is a start. Just a retirement account so that money isn't taxed at the same rate, or it won't be taxed when I plan on retiring. But yeah, I want to make a video about it. I feel like that's kind of a different investment philosophy. This one is just, I play around a lot. I really do. I mean, I hold them long term, but it's more play around, whereas my Roth IRA will be just kind of ETFs, very long term, easy, never worry about kind of stuff. So yeah, that's it. Crypto's doing really well this year. I might make a video just short. I'll just include it with my Roth IRA video. It'll be like a little thing. But yeah, that's my portfolio. $2,851.99 invested. This is at age 19 and a half. I just celebrated my half birthday on November 22nd. So yeah, thank you so much for watching. If you watched till the very end, I appreciate it. I hope you learned something. It's not about getting rich fast. It's about getting rich over time. And I guess before I end the video too, like, look at this crazy 10% drop from here to here. You're gonna have those. Look, 11.39%. I was down over $300, and it just recovered. You just gotta wait it out. It's easier said than done, but look, if I sold out on my stocks, I would have been down to like 2,500, and that's the big part of investing. Just knowing in your heart that your investments will do well, and that you have the belief, you've done the research, and that everything will be okay. But yeah, this is a very long video. Don't invest in any of these just because I talked about them. Do your own thing, do your own research. But thanks. Have a great rest of your day.